All right, so for those who we haven't met in person, my name is Mark Joliker. I'm a IT project manager, basically, and an investor, and I do all kinds of different projects investment-wise. I have invested in local real estate rentals. I have now playing in cryptocurrency and Bitcoin, also investing in businesses and stocks and bonds. And so I've been following financial markets probably for 20 years or more, and been trading on and off for about 15 years. So it's only my own personal money. And so what I'm going to share is some real basics about basically using charts to decide, you know, if when crypto's a good buy and when's a good time to put on a trade and to sell your position. So please stop me if the audio breaks up or I need to repeat myself. I'm happy to do so. And really, I want this to be a Q&A type of session. We don't have a lot of people on the call, so you can feel free to interrupt me and ask questions along the way. So for the agenda, I had this in the meetup. I'm going to show you guys my favorite tool. It's called TradingView, and talk about and show how that tool works and talk about it a little bit. I will go into talking about the CoinMarketCap website and talking about Bitcoin dominance and what does that mean, and then, you know, looking at long-term pricing for Bitcoin. And then we'll get into specifics about charts, some of the tools you can put on your charts to get a good feel for what the market's doing. And if we have time at the end, we can do some Q&A or just some discussion. So first, I'm just going to open up TradingView. And tradingview.com is, there's a free version of this that does not give you quite as much functionality as I'm going to show off today. And then there's a pro version, and I'm using the pro version. This is a website where you can get ideas for investments, mostly for stocks and indexes, but also cryptocurrencies. And people, you know, can post information. There's all kinds of stuff on here, but what I use it for is for the charts, and that's what we're going to focus on today. So in the tool, there's a chart tab here, and you can save your chart layouts. So once you have a chart set up the way you like, you can save, you know, how it looks and how it acts, and then use multiple different charts. So first, I'm going to take away all the stuff that's on here. There's all kinds of stuff on here that you don't need to talk about all at once. I'm just going to hide a lot of the stuff. And you close this off. Whoops, wrong one. All right. So the first thing is for this charting software. Over here on the far left is where you enter your symbol for the chart you want to follow. And you don't have to know the symbol. You can say S&P 500, and it'll kind of search all of the stocks or charts that are available. And you can kind of see here where in this case the S&P 500 index is. But you can also, you know, chart the futures. You could chart, you know, derivatives of the S&P 500. So anyway, you can kind of find your charts by searching through this box here. Again, I'm going to go pretty slow through this because I want to make sure people get the basic concepts. But I'm sure most people have looked at the charts for stocks, and this is the same process that I'm using for cryptocurrencies. I like looking at daily charts. So the daily chart shows the prices of the commodity or the stock in daily bars in this case. So each bar here, each graphic here represents 1 day of trading, and you can see along the bottom of the page the days of the calendar. And you can see in this case the S&P 500 US stock market has been kind of trending up here in a general upward motion. But you can also trade or look at charts in longer time frames, like the weekly chart. You can look at the month. Whoops. Look at the monthly. Where is it? Having trouble opening it up here. I'm having trouble with this thing now. Oh, there it is. There it is. So I can look at a monthly chart, etc. You can see here for the last 10 years we've been kind of going up and to the right for the general stock market. The next main feature here along the bar at the top is the type of charts. So there are some people who like to look at line charts, and this would be connecting all the dots at the end of each trading day. I prefer and I recommend people use candlestick charts or candles. The candles give us a bit more information. In this tool here, the green candles mean the price started at a low part of the day here, and it rallied all day and it closed at the upper end. And these little lines above and below are called wicks, and these are the basically the extent of how far the stock went during the full day. But the most important information is where it started and where it stopped. So if it started at lower, ended higher, that's a green day or an upward trajectory or upward trend. And if it started at a high point and it closed at a lower point, that's a down day. And you'll see on your CNN, BC, you'll see those the Dow lost 100 points today, that kind of stuff. Okay, so these are kind of basic concepts here. So I'll continue using this tool, the TradingView tool, and I'll keep adding to these charts and adding more discussion to it. So next I wanted to talk about crypto market cap. So the cryptocurrency markets have been evolving over several years. There's a great website called CoinMarketCap. Which will, here you go, there it is, cryptomarketcap.com. And this website will help us visualize how the overall crypto market is gaining in asset value. So today, we are at 216 billion, almost 217 billion dollars in cryptocurrencies. About 52% of that entire market cap is Bitcoin. BTC is the symbol for Bitcoin. You can see here the top cryptocurrencies, and you can see their market cap in dollar value here. What I like, and I actually won't, I'll show you the charts here. Under the tools, we have charts, global charts. And here you can visualize how the market cap has been trending for the last several years. This is a little bit too difficult to read, so we're going to zoom in. But just to show you, back in early 2017, we had a large increase in the market cap for all cryptocurrencies. And then we had, since the beginning of this year, we had basically a downtrend where the market cap has been shrinking. I'm going to zoom into the current year. And again, you can see we peaked at about $823 billion in value. And today we are at right around $217 billion in value. One thing I want to highlight here, and actually I'll pull up another tool to visualize this better. But one thing I want to highlight is the if you look a little bit longer, maybe a 1-year period, we were at, a year ago, we were at about 145 billion. So I think we are definitely in a bear market for crypto. All the assets are losing value or they're downtrending. And I don't think we're done downtrending. I don't see that we're at a bottom here where things are going to turn back up. And I think it's more likely that we're going to continue shrinking the market cap, and I would not be surprised if we get back to about half of where we are now and back to the levels we were at a year ago. So that's just kind of my opinion. I don't have hard facts to say that, but I think in general, watching financial markets, we have not seen enough blood on the streets yet. You know, I think we're going to have some people really lose some money, and then people will walk away from the scene a little bit, and then we'll be ready to rally again. I also look at, I don't know why this chart's not coming up. This is the market cap excluding Bitcoin. So I'm going to pull up a different tool. There's a website called coinsignals.trade, www.coinsignals.trade. And what this does is it will, it uses TradingView, the same tool I was showing off, but it pulls data from CoinMarketCap. And there's two charts I like to look here. This one is the market cap of altcoins, which are the non-Bitcoin coins. So everything but Bitcoin. And you can simply search on this. Let me see if I can do it. Simply search here for altcoin. And you can see there's altcoin dominance, there's altcoin market cap, multiple metrics here that you can pull up. And this takes the same data from the other website. So what I look for here is, again, since the peak back in, let's see here, we had peaks back in January. So we peaked over here at about, for the altcoins, we were at about 520 billion at the top. And for all the altcoins, we are down here at 102 billion. So we've lost about 80% of the value. And what I'm looking for here is to see this trend reverse, right? We have this trend where we're continually losing value. And I wouldn't say that we are at a bottom until we see this trend really reversing. I'm going to hide this piece. So a simple chart here that easily sees the visualization. One thing I did looking at this chart is I noticed back in April that we had a pretty good bounce in the crypto markets, and a lot of cryptocurrencies rallied, you know, 70% in a month. And it coincided with this point in time when you can see here the trend, the downtrend started slowing down, and then it turned around and started trending up. And from this point of April 12th through about May 10th, a lot of the altcoins gained 70% in that month. So it's an opportunity. When you see this happening again, that's an opportunity to get involved with some of your favorite cryptocurrencies. And speaking of that, there's a little bit of slowing down of the downtrend here, it looks to me. You know, this downtrend was pretty strong. We saw a little bounce, but then it resumed. And then we saw a little bounce, resumed. But now we've seen a little bounce, and the market cap of altcoins is starting to show potential here that it could, you know, continue moving in an upward way. And if that happens, we could have that opportunity again where for a longer period of time, maybe 3, 4, 5 weeks, we could have a rally of the altcoins. There's so using again coinsignals.trade, you can get this data about altcoin market cap. Another piece that I like to look at on here is the Bitcoin dominance. So this is also a chart that comes from CoinMarketCap. This is, I'll zoom out again. Let me hide some stuff that you don't need. So if you look back in history, there have been times when Bitcoin dominance is increasing and times when Bitcoin dominance is decreasing. When Bitcoin dominance decreases, that usually means there's a major rally going on all the cryptocurrencies other than Bitcoin, or maybe with Bitcoin, but all the altcoins are also rising at a high rate. So again, if you look at that same time frame of here, April 9th through May 10th, you can see a very significant change in trend here. So Bitcoin dominance was growing here, and then it shifted and turned around, and now you can see it started growing again. During these times when Bitcoin dominance is growing, those are times to stay away from altcoins completely. I mean, sell what you have. Don't bother trying to trade them because they're going down in significance against Bitcoin. But in the last 4 days, I'm just going to zoom in here. 1, 2, 3, 4, 5, 6, 7, 8 days, we've seen a change in trend here. So we are right at the beginning of a probable opportunity here for altcoins to take more market share from Bitcoin. All right, I just want to pause to make sure audio is good. Can you guys hear me well enough?
Yeah, I can hear you.
Yep,
Awesome.
sounds great.
All right, any questions about Bitcoin dominance and what it's useful for, or overall market cap metrics?
Yeah, Mark, I have a question for you.
Yeah, go ahead.
So I've heard people say that, you know, Bitcoin is not as safe, but as far as crypto goes, it's kind of like the safe haven asset. Yep. So do you see in bull markets, do you see Bitcoin dominance going down, and then in bear markets, Bitcoin dominance going up?
Yeah, that's pretty much what you're seeing here. Because this is dominance against other cryptos, right? So during this very strong bear market we've had since January, so right over here, you know, we've had Bitcoin dominance growing, but you can see counter trend waves here happening, or at least one counter trend wave happened, and maybe another one's just about to start. So what happens is Bitcoin is kind of like the US dollar. It's the reserve currency of crypto. So if your other currency is sucking wind, you end up selling it, you end up holding your money in Bitcoin, basically. That's not quite the total story, because there are 4 or 5 different coins that are called stable coins that are pegged to the US dollar. So if some traders will store their money that's not being actively used, they'll store it in those pegged US dollar tether type products. But in general, most crypto traders would use Bitcoin as the stable, you know, reserve of value, store of value. And in fact, that's my long-term thesis for Bitcoin, is it'll grow and grow and grow in market cap, and it will become, you know, a major reserve currency for the world, similar to how gold and oil are right now. But you know, that's still, we're still in the early days of that, and it's quite possible that Bitcoin will lose dominance against a different coin. Right now, there's no risk of that happening, but it's something to watch long term. If Bitcoin dominance is going down and Ethereum picks up and literally passes it, there's a chance that Ethereum would be that long-term reserve currency for digital assets. But I don't believe that's going to happen. I think the fundamentals of Bitcoin are better because no single group or company or committee can control it. It's significantly decentralized, and there's so many miners mining it that it's unlikely to be pushed out by a different coin. However, with that said, it's definitely one of those things you have to watch if you're a long-term, if you're going to hold value or wealth in Bitcoin. All right. So we talked a bit about Bitcoin dominance. Okay, so this one is actually my favorite topic. I'm going to talk about long-term Bitcoin, and I'm talking many years here. So this is a chart I kind of stole from a guy who did it online, but from the TradingView app. But let me zoom in here. There's a lot of information here in this chart. So pull this in. So first of all, it's a monthly chart of BLX. BLX is an index of all of the Bitcoin prices that are that are on different exchanges around the world. So this is like a tool, an index that pulls together an average of all the prices. So it goes back several years. So this chart starts at August of 2010, and it has a low price here of 1 penny per Bitcoin back in October of 2010. And you can see here on this chart, zoom out a little bit more. So here on this chart, you can see 3 waves where there were basically three bubbles in Bitcoin. So we went from 1 penny here to the high of $26 almost. And then we had a 93% drawdown. So Bitcoin lost 93% of its value in about 6 months after the bubble popped. Then we had another slow rise and bubble. We went up 58,000%. The top of this bubble, we were at right around $1,230. So we had a massive, wealth building scenario here. But then we popped that bubble and we lost 86%. And it took a long time. It took almost a year and a half here to kind of stabilize and start rallying again. I believe, if I'm not mistaken, this was in conjunction with the Mt. Gox. So the ascent here was during the Mt. Gox exchange's growth, when everyone started trading on Mt. Gox and making a ton of money on trades. And then with a couple of hacks of Mt. Gox exchange, people lost trust in Bitcoin, and there was a major bear market. So again, we lost 86%. Since then, since 2015, we see the market start rising again. And I don't know if it was obvious to you, but this is a logarithmic chart, right? So we start at pennies, and we go up to $100,000 over here. So, in percentage terms, Bitcoin gained another almost 12,000%. So we went from, again, the lows here of about $175 all the way up to almost 20,000. 19.6, I think, was about the top in the U.S. exchanges. So we gained 12,000%. People made fortunes if they were invested. And I guess what's notable is each rise has a lower percentage rise. So we went 58,000%. We went up another 12,000%. And I would expect the same to continue going forward. So what I'm doing here with this chart is I'm forecasting what's to come. So we went up to almost 20,000. We are currently at right around, 6,500 or something. This is, again, a monthly chart. Let me zoom in a bit more. And I don't think we're done going down. See, I think we could lose 85% like we did in previous drawdowns. And if that was the case, we can go down to about 3,000 for Bitcoin. And I don't think it's going to happen tomorrow. I think it's going to take some time. It'll kind of follow this path where probably in February, March, April, we're going to say we've turned the corner. Now, I could be wrong, and it could rally from here. And that just means the market's stronger than I'm predicting, and the drawdown won't be as bad. For a lot of the altcoins, the drawdown is 90% or 95%. But a lot of the altcoins had gone up even more than 20,000x, 20,000%. So they have a further to fall, in my opinion. So my current thesis is we're going to follow some kind of a trajectory like this, where we slowly, curl over, stabilize. And what I did is I took kind of parabolic looking curve here and kind of connecting the bottoms. And if you just extend that forward, you can see that, we would kind of flatten out over time, because my belief is over time, these spikes will start flattening out and we're going to eventually have a stable value of Bitcoin. But the next rally here, if it starts in February, March, April, or maybe we have a false rally and it comes back down, and it's maybe in 2021 that we're actually rallying. But I do think that we're going to have another rally, and at that point, the real FOMO will kick in. People will say, I need to have Bitcoin. I need to have 5% of my wealth in Bitcoin. And when that happens, we're going to be at 100,000 or 200,000. And that'll probably be momentarily. That probably will be a number that when we reach it, it'll reverse immediately, because everyone will say, okay, I met my goal and I'm going to sell. So this is kind of my current thesis of the price of Bitcoin. Now, I'm not a huge fortune teller. I don't know what might happen with, the system, if there's a defect or something. But I do have this general upward bias here that I believe we're going to get to the hundreds of thousands of dollars eventually in the next, 3 to 10 years. Anyone have a comment about that or question? All right, so now I'm going to talk a bit more precisely about trading Bitcoin and which charts to use. Let me go back to this guy. So I'm going to go to so this is a chart of Bitcoin for the last 3 months or so. As you can see, it's kind of zigzagging. We'll zoom out a little bit. We're in a general downward trend here. What we can do with this tool is draw trend lines. So that's a tool. There's tools here on the left where you can choose your tool. You can choose all kinds of different arrows and lines. So I'm just going to take a trend line. And what I'm going to do is I'm going to just join the high points of this mountain here. And I think a 4-year-old would be able to tell us which way Bitcoin's going in the next few months. It's going to keep doing that, right? Unless something else happens. The other trend that's important right now is we've had multiple touches of this 6,000 level. So we had kind of a freak out in February here where everybody sold everything and it very quickly bounded back up. We had another point in April where it got close, but people were feeling bullish, so they bought up Bitcoin and it didn't go quite as deep as the last time. And then you can see here we kind of went under it. We touched it again, touched it again, touched it again just a few weeks ago. So right at around the 6,000 mark, there's a pretty good repeat pattern here of we're touching that value. At some point, big money decides that's the value of Bitcoin, and they start buying. and that pushes the price back up. What's happening now is, and I was basically watching this very carefully. What's happening is once the price gets close to that trend line, even before it hits it, it's being sold. You can see here in one day there was a massive sell-off. And this is because the Bitcoin market in exchanges is very illiquid. There are people that have big positions, they're able to put on short positions, and they're pretty much able to manipulate the prices. So if I know tomorrow or the next day it's going to tank or start tanking, I'll tank it, I'll sell it today, I'll push it down today, I'll make a bundle of money in the meantime. But when it gets to this point, I'm going to say, okay, I'm going to take my profit because I made a ton of money on that short. I don't know if it's going to 3,000 this week, so let me, get out of my short position. So they have to buy back the shares. And when they buy back the shares, then it starts rallying again, or it stabilizes a little bit. So you can see here that even before we touch these trend lines, we're seeing the reversals. This is last week. We had a situation where it dumped really hard because of some kind of manipulation again, and then it pumped really hard an hour later. So we had this little wick that was formed on this candle. So the first thing in charting is, I guess I would first of all recommend, if you are still thinking of these wiggly lines and you don't know what they mean, I would say read up on candlestick charts. There's a lot of great information on the internet. In fact, I think I can just candlestick chart patterns here. There's all kinds of really great information on the internet here that describes what to look for in the patterns. When you see a pattern, like this, they call this a hammer or an inverted hammer. It often will give you a hint of the potential of the trend reversing. So there's all kinds of information that candlesticks tell you. I'm not going to describe all of that today, but I will highly recommend that you get familiar with that. So first is use candlestick charts. Second is, just look at things from a trend perspective. If it's going down, it's probably going to keep going down. And think of these as supply and demand, right? So when we get down here, no one's willing to sell anymore, but there are buyers. So the buyers start winning and they start rising the price again. When you get close to a potential point when people might sell, then others decide to sell faster and so on. So you end up with a selling pressure that starts a new trend. And once something's in a trend, it continues following it. So the next thing I'll add here is a moving average. Let me back up here. There's a tab here called indicators. You can add indicators to your chart. And I really like the exponential moving average. Well, why is that? Okay. Because I have it already on my chart. I just have to unhide it. So the exponential moving average, and I use a 10-day exponential moving average. And I like using a nice black line because you could step back from the computer and you can see this trend, and you can usually see if the price of the crypto is above the trend line, above the moving average, we're in an uptrend. If it's below the moving average, we're on a downtrend. So it just helps you visualize the trends fairly well. And I've used this exponential moving average as a trigger as well. So you can, look at it here and say, as soon as it breaks below and closes below the exponential moving average, I'm going to assume the trend is changing. And so it's time to sell my position. So if you did the same over here and you bought when it closed above, so you bought over here. There's a tool here that's useful. So let's say you said, I'm gonna wait till midnight or whatever, and let's see if it's going to close here above the moving average. So you decide to go in a position, buy some Bitcoin, and then you decide to sell it when you close below that trend line, right? So you do it over here. You have made, I don't know why I can't see it. I don't know why I can't see my words. I think it says 70%. But you made a large profit on that one. Where I don't use it for a trigger is when things are wiggling back and forth. You know, if the price is wiggling above and below the line, basically we're in a trendless market, or the trend is very minor. So on a daily chart, it doesn't make sense anymore to use this. So this is one of the tools that I use on a fairly regular basis to help me identify trends. I want to talk about value your wealth in Bitcoin. I didn't really cover that, but let's say we go to Monero. So I might trade a different coin, but I'm always trading it Monero against Bitcoin, not Monero against US dollar. And the reason is, you know, my long-term vision is Bitcoin is worth 100,000 or 200,000. So I want more Bitcoin. I don't want to potentially trade in US dollars and realize that in the meantime, Bitcoin rallied harder than Monero. So when I look at these trends and these, you know, buying the points to buy or sell, I'm going to say, oh, if Monero is doing better than Bitcoin, then I might play that game for a little while. So over here, I might buy and then sell over here when it traps below this, or reverses the trend. Same thing over here. I might buy over here and then sell when I see a reversal. Using candlesticks, this is like a very clear reversal right here. We had a long red candle after a doji. The doji is a potential reversal pattern. So you could just look at the candlestick here and say, oh, I think I should get out. And you would have done well to get out here, because a couple of days later, you would have crossed below your trend line. So anyway, value your wealth in Bitcoin. Trade against the Bitcoin pair. Don't trade against Monero USD. And most of your exchanges are going to allow you to exchange your crypto to Bitcoin anyway. So that's kind of the natural place to be. So we talked a bit about trend line, the moving average trigger. So again, I'm using the 10-day exponential moving average. All right, so watch the volume. So I'm going to click on here, my volume indicator. So volume bars at the bottom of any stock chart is showing us how much of the unit has traded on this exchange. So there could be different numbers on different exchanges, but you'll also notice for the well-traded coins, you'll notice that, you know, big volume bars sometimes coincide with big price moves in one direction or the other. So here you can see some very large volume up days. Even on the reversal here, we had a very large up day, and we had a potential reversal. The price did not move that much. It kind of traded hands and stayed about the same. And then that coincided the next day with a large volume sell day. So I look for volume. I look for volume that is above the average. So it's like an average here on Monero. Let me open up BTC. So I'll just kind of zoom out where you can visualize when there's a big dump and a reversal, that's when you'll see large volume bars. So in this case, very, very large volume bar on the day it reversed. You could also see volume climaxes as the price was going up and up and up. You know, you can see, okay, there was a reversal here. This is a serious reversal. Much higher, about double the daily volume. So watch for volume. That's sometimes not easy to see what's really going on with volume, but anything that's above the average is something to take note of. And then I use a tool in TradingView called volume profile. And I'll turn that on here. So what volume profile is a set of bars on the horizontal here that represent the volume bars below, but they represent them at the price levels where that volume was important. So I'm going to try to declutter here. I'm just going to take this off, and I'm going to zoom in a little bit. So what this is telling me is for all the days that are visible on the chart, these days, most of the buying and selling in volume terms was right here at 64.23. This is where the market has the most people that are holding the coin or they sold the coin. So these are the people that have, you know, this is kind of like the current fair value for that coin if you averaged out everyone who bought and sold in this time frame. What you'll see is if a coin rallies to a point where it's in a low volume area, it takes more effort to go higher. So it's kind of like a magnet. It wants to come back to the high volume areas. So you'll see here there's a little bit of a gap between 6,700 and 6,900. So it's about $200 gap here. And what happens is when we hit that, it'll jump right over. It'll jump quickly above it, or it might not even be able to get out of the range where it's at 67. So you can see here about 4 days ago, we hit that low volume area, and then it reversed right away. There wasn't enough buying pressure to push it higher. But if it had pushed higher, it probably would have reached the next bump here, or maybe even the next one up here. So what we're looking for here is just to understand where's the consensus value levels or the levels where people are willing to buy and trade their coin. Now it changes every time you include more days. So if you will zoom out here and it'll include a longer time period. Now you can see there is a huge volume here again at the 64. There's another big bump here at 73. So again, when we get to this level of 73.87, it's going to be really tough to get out. I mean, it might stay in this area and consolidate here, or that might be a point when people are holding at this level because they bought way back in April. They might be saying, okay, I'm ready to sell now because I've been holding in upside down all these months. So they might be willing to sell. So look at the volume profile. It helps you visualize, again, where people have, where they're holding the bag, where they're holding a coin that's not in the right spot. So a very useful tool, but very important to note that once it gets into the blue sky or the empty spots, it can fall quickly through the empty spots because there's nobody there to buy at that level, or just, it just can move, and it can be manipulated by like people who have a lot of cash in the exchange. So that was volume profile, and then I have 4 additional indicators that I will show. Each of them I really like. They help visualize again. So the next one is called MACD histogram. So MACD or MACD is a moving average convergence divergence. I think that's what it stands for. But basically all it does is it helps us visualize the trend. And so using a histogram, which is a chart that has a positive and a negative, you can see these kind of waves of movement. And looking at it by itself doesn't help, so we'll put it underneath the chart. And let me hide the volume profile so it's not too cluttered here. But here you can see it gives us a confirmation that the trend is changing. So as soon as we go from a peak or valley here, and we start turning up, we may have changed the trend. So that's a nice confirmation signal. We have another example here in August where we started turning the corner, and with the turn, the price started stabilizing. So it almost, in this case, predicted the uptrend even before it happened. The actual uptrend only started after here, August 14th. But this MACD helps us to visualize when the trend is slowing down, right? The downtrend in this case was starting to slow down. And of course, you can use it to time your sell, the point to sell. So when the peak starts coming down, that might be a good time to sell. In this case, it rises back up, and then again we have another indication it might be time to sell. So that's a useful tool. The next one is, whoops. The next one is Bollinger Bands, and I'm going to hide this again. There's my room. Bollinger Bands. Bollinger Bands, looking line. On either side of the most likely places that will stay. So it's like this, 2 standard deviations away from the axis. And there's multiple ways to use Bollinger Bands. I guess the one that's the most useful is to identify when something is out of line and it's probably going to reverse. So if the price goes above the Bollinger Bands, in this case, this is really bullish. However, at some point of being outside the Bollinger Bands, it will cause a reversal. So that is a useful tool. I also really like looking for squeezes. So if the Bollinger Bands, whoops, try to find a good example. A good example right here. So if this is what we're looking at, where the Bollinger Bands start getting tighter together, that means we've been consolidating our prices. And what generally happens after they compress is they'll expand. You know, they'll have a pop in one direction or the other. In this case, it started the downtrend. And you can see that again, okay, so here we're squeezing again, and then it continued the downtrend. So when the Bollinger Bands get tighter together, that's a good signal to look for to identify when the trend might be expanding in one direction or the other. And here's a great example where we went up, crossed above the Bollinger Bands, and we jumped up. Again, there's a lot you can do to read about Bollinger Bands, and there's about 4 different ways to use these. But I like to use them just to basically see how far can it go. Because sometimes you go to a crazy altcoin. You go into a crazy altcoin and you'll see something. I don't know if that's a good example. Sometimes you'll see the price way above the Bollinger Band, and you feel like, okay, I got to buy it. It went up 100% today, and maybe it'll go up 200% tomorrow. Okay, Corey says try Doge. I don't even look at Doge. Let me try Doge. Yeah, so this is a cool, this is a classic version of Bollinger Band tightening. So look at this, many weeks of no movement, very, very, very narrow ranges, and then boom, it goes above the line, and that is almost a buying signal right there. Something's happening. It's gonna start rallying, or it might be a false breakout, but at any rate, look at how much it rallied after that. I mean, that was a great move. You know, when you see it constantly closing above the upper Bollinger Band, you know, then it's like, okay, just watch out, because one of these days it's going to reverse. Yeah, there's more examples of the same thing here, where tight Bollinger Bands exploded into a much wider Bollinger Bands. And again, wow, this chart looks very profitable. If you just followed that method right here, you bought at the end of the first day after a Bollinger Band expansion happens, you know, you get into a trade here, and then if you use like the black line to get out, you'd make a pretty good profit on all three of these snaps that happened here. All right. It's not my favorite, but I got to mention it because everybody talks about stochastics. So let me close this up. I'm going to get rid of MACD for a second. So stochastic, there's multiple different types here, but I'm just going to take the basic one. And I'll just show it in big here. So stochastics is it looks at the opening, closing, and I think the range prices for the security on each day. And it has a complicated formula to basically get a number between 0 and 100. And what you're supposed to do for stochastics is you look for places where the stochastics, and this is an oscillator, it goes up and down, but always between 0 and 100. And when you look for it to cross above 20 or start coming from the bottom to a new trend, so that's a buying signal right there. And then when it crosses down from 80, that's a selling signal. And if you want to be a little bit more fine in your signals, you can look for, there's two lines drawn here. One is more of an average or a signal line. So when the blue line, which moves faster, crosses the red line, that's another signal to buy. And when it crosses the other way, that's a signal to sell. So that's the concept of stochastics. And now if we put it together with the chart, so here you could see Dogecoin, even before, it's kind of cool, even before the expansion on the Bollinger Bands, you can see that we popped through the 20 mark here. So it would give you a really good first hint that this might be happening soon. And then again, there's another point here where it looks like it might be a buy using stochastics. I would never use stochastics by itself. I like to use other methods like the Bollinger Band or the average, moving average, or just the price and looking like, is it going to do something here? But here you can see a downtrend in stochastics that, you know, is pretty much confirming that we're done with the rally. You know, we had a really nice rally. Is it going to keep going another leg, another leg? Well, if it was to do a third leg here, if we did one leg, the second leg, if it was going to do a third leg, the stochastics would stay above, you know, 20 or 80, or it would turn back down. So you're kind of looking for that to confirm that we're still rallying. But this tool works really well for stocks that are going sideways because they help us identify points of reversal in a generally sideways trend, because it goes up and down between 0 and 100. And then the last one I want to show you is is actually better than stochastics. It's called relative vigor. So over here, if you type vigor, relative vigor index, RVGI. This one, similar to stochastics, it uses the prices, the high, low, and opening and closing prices, and it has a complicated formula. But this one doesn't go between 0 and 100. It just kind of fluctuates around 0. So very similar, but we don't have those signals at 20% and 80%. But we do have very good advanced warnings here that something changing. Let's see if I good example. I think it's Bcash. So, yeah, so here you can see quite a few examples here where we had a crossover, but it was a false crossover. It didn't materialize into a good trade. You might have got in if you just used this and then ended up the next day selling and not making a profit or losing a little bit. But one thing that's useful, I don't know if it's this chart, which chart? One thing that's useful on this indicator is to do a trend analysis on the low point and the high point. And if you can see a divergence, so what that means is we have some lows here that are downtrending. We have some more lows here that are downtrending. If you see a divergence where the lows, so we have low points over here, down, and on the same chart below we have something like this. That would be a very strong view. Go ahead and take a chance on that because this indicator is often early, but it often will give us a hint that the downtrend is peter out. I swear I saw a really good example yesterday. Let me see if I can find it. Yeah. This is kind of an example here, although it's not very significant. But Ethereum, it seems like it's the trend's reversing based on a divergence here. But you know, this looks pretty flat, and this is significantly not flat, significantly a downtrend. So when you see that divergence, especially if you see it angled up pretty high, that would be a really strong signal to jump in. And here you didn't even need this divergence to tell you. You just look at these Bollinger Bands. You know, if it keeps poking below the Bollinger Band and then you see a reversal candle like this, this is a very classic hammer, and that's not necessarily a reversal, but you check the next day, and if the next day reverses, then the downtrend is likely to be over. So here you can put it all together on Ethereum. In fact, I bet you the volume's very high. Let's see. Yeah, so let's see the massive volume here. And so yeah, it's pretty much, you know, 8 ways here we're being told that Ethereum is about to reverse. So a really good trade to buy some Ethereum. Now, will the overall downtrend resume? Yeah, it's quite possible. We have a crossover here, and we have overall general market that's going down. So I wouldn't necessarily say buy Ethereum today, but if you bought it, you know, 2 weeks ago, that was probably a pretty good profit right there. Okay, so that was the end of my prepared section, and I definitely would like to collaborate. If you are interested, I can pull up a chart and talk about it, or if you have any questions, feel free to throw comments in the chat or just speak up. Anybody?
What other resources do you think would be really useful to research?
In what sense? Are you thinking more fundamental, understanding the coins, or in the like technical analysis, charting type stuff?
The technical analysis charting.
Yeah, I think I mentioned it already, the candlestick charting resources, and then I would Google Bollinger Bands as well. the rest of these, you know, what I kind of went down the rabbit hole when I was trading a lot. I ended up with like 17 indicators on my charts, and you know, it got complicated, and then it almost gave me like signals that were competing with each other, and ultimately at the end of the day it was like, okay, I'm not trading anymore because I have too many things that are conflicting. So sometimes it's just good to hide everything. Oops.
Do you think it's a good idea,
look at the data?
Sorry. Do you think it's a good idea to apply certain different charting principles to specific coins that you see that work, and then try to like tie those together to grow your portfolio overall? Does that seem like a good idea, or is that kind of like, I mean, it is riskier, you know, with risk comes reward.
So what I would say is every trader ends up with their trading system, or like something that they feel works for them. So some people like to do day trading, right? The day trader would never look at this chart, the daily chart. They would look at the 15-minute chart, you know, and they might have some indicator that they like, or they look for a chart pattern, like these 3 bars here looks like a reversal. So they might trade only when they see those 3 things happening, you know. So there's what I guess I'll say is a very personal thing. There are charting techniques or patterns that you look for that everyone has a good sense of what they are, and you don't want to go against that grain. But what works for you is kind of a trial and error thing. There isn't a set model that just works all the time. The other thing is, let's say this thing was magic, right? Let's say this exponential moving average is magic, and every time it worked. If that was the case, you know, other people that have computers would say, oh, look for that pattern and jump in at the right time, jump out at the right time. And they would just trade it with their computer. They would get really good at it, and they would basically jump in before you could, and you wouldn't be able to participate. So what happens is, when there is a set of patterns that are so predictable that they always work, the computers take that predictability out of it. So what happens is it stops working all of a sudden. And you could go like 7 years with a trading plan that works amazing, and then all of a sudden it stops working. And it's just because other people caught on to it, and it's no longer an edge. You don't have the edge anymore. You're in the middle of, you know, computers with algorithms. So I think I deviated a little bit from your question. My point, I guess, was, you know, what you want to do is develop a trading plan that you can repeat, because if it's repeatable, then you can make a business of this.
Okay, but what my idea would be to do like a month to month. So like do a set amount of trades in whichever coins I have every month, because like the tax code and stuff like that, trying to trade now, most people actually end up losing money even if you made money, because of just the taxes on the back end. So I'm thinking more of like a month to month, so that I can limit my trades to, you know, however many coins I have times 12, and it'll be easier to make the taxes that way.
Yeah, what most people will do is, and this is advice I probably should have put in my talk here, but you should never bet more than about like 1/20th of your stake. So let's say you have $100,000. You shouldn't bet more than $5,000 on any given security, because you don't want to be out of business, right? Let's say you bet 50% on one coin, and that coin has a major security flaw, and it could lose value overnight and never regain it, you know, or over a 2-week period and never regain it. So you don't want to put all of your wealth in that coin, or even half your wealth in that coin. But if you put 1/20th of your wealth in that coin, okay, now you can take a risk. and hopefully it's a 50x someday, and you're allocating a percentage of your bet to that bet. You know, that's not so much of a trading method, but an allocation method or positioning method. And you could still use charts to identify good entry points, right? And maybe good times to sell. But the idea would be to do that in context of an overall strategy of, you know, what are you going to do with all of your money? So for me personally, right now, I'm all in Bitcoin. In my opinion, Ethereum is going to zero, right? Like that's my current based on Bitcoin dominance and the market cap for alts. I'm waiting for the evidence to tell me otherwise. But right now, this looks like really bad. You know, so I would not buy anything on the Ethereum network for a long time, for a monthly position or a half-year position. What I would do is I might do a day trade or a weekly trade here where I might buy this reversal and to see what happens, right? But I'd be really close and be ready to sell it back, you know, as soon as possible. You know, or I might try to get on this kind of action. Like this was the April timeframe when I was talking about the market for alts woke up. You know, we had a pretty nice move here. You know, if you just look at this trend line for this exponential moving average, you made 43% Bitcoin terms. So, you know, that was a really nice move. And, you know, maybe that's happening here. Maybe we're in the middle of that or the beginning of that. So for those kinds of things, you have to have a plan when you're going to sell. Whenever you buy something, make sure you know when you're going to sell it. Like you sell it when your theory is wrong, and it goes below this little trend line, or you sell it when it's back to where you bought it. You know, you just have to have a plan to decide when to sell it based on the chart. If you're going to buy with the chart, have a plan to sell with the chart, because otherwise you end up with this guy that I have, which I'm extremely not proud of. I bought this guy back. Well, first of all, you know, I kind of broke all my rules, but things were going crazy, and Coinbase said they're going to list it soon, right? So it went mental for a few days, retracted, went again, and I bought right at the top. Look at that. So that's when I bought it, back in July 15th. And right now, I am 43% underwater in Bitcoin terms, right? So it would have been better to just hold my Bitcoin and do nothing else. I would have done a lot better. So, you know, I should have had a plan to sell right away. I should have had a plan that said when I've lost 10%, I'm selling, or when I've, you know, gone past this trend line, I'm selling. And I would have only lost 5% or 10% instead of 44 and counting, right? I'm not done losing. You know, I'm hoping it's going to rally back up, but, you know, I'll be the first guy to sell when I get back to even. And so that's why there's supply at this volume level here. Does that help answer your question?
Yeah, in a way. I was kind of thinking of like a diversified portfolio, not necessarily focused on one coin, but I mean, you pretty much touched on what I was talking about. Yeah.
Yeah. So I know some people do like, let's buy the top, right? Let's continually move to have a certain percentage in each coin. I think that's a losing strategy, actually, because I think in crypto, one of them is going to be 100x, 100 bagger, right? It's going to be awesome. And the other 99 are going to go to zero. Like, so I think it's actually it's not based on anything other than the current price. That's not a good strategy for crypto. I would prefer if you said that you're doing it because you know something, like you have a really strong fundamental view about the coin, like you know EOS and you know that it's growing as a network and people are building apps on it, and there's a growth of community, growth of developers, growth of diversified, you know, or distributed, miners. And so because of some really well-researched fundamental views, you think EOS is going to grow and it'll someday be just as big as Ethereum. Okay, so if that's your view, then yeah, buy some. And you might want to buy some when there's a downturn because you have a strong opinion. But I don't have that opinion about most of the coins other than Bitcoin. Right now I'm thinking Bitcoin's the winner in 10 years. But that's my fundamental theorem, and others can definitely have other opinions. From a charting perspective, the charts help you determine whether the time to buy or sell. Greg asks, have you considered programming your technical analysis into a trading algorithm? And I am absolutely thinking about that. This TradingView tool is really useful because you can actually create code. So I don't know if I'll find it. Yeah, like I've played in this tool, created my own indicators. You can't see them on the chart here, but there's a whole coding language here where you can create your own indicators, and then you can identify strategies when the indicator is saying, hey, let's buy at this point and sell at that point. And then you can do back testing, so you can test your strategy. So I don't know if I guess I don't have a good example up right now, but you can show, like, if you use that strategy based on the code, what percentage of your trades would have been profitable and for how much. So it'll give you standard deviations and all that, and do a back test. Really cool stuff. This is like going to a whole other level, and it's actually very complicated. I'm looking for people to help me code this stuff, and because I'm hoping to employ those kinds of techniques to automate the trading. Any other questions? Anybody? All right, well, if there are no other questions, I think we can wrap it up. And again, I apologize for the late start, and hopefully those who missed it, I'll be able to give them the recording so they can listen to it separately. Again, thanks for attending. Yeah, go ahead.
Will you be sending a recording to everyone who was on the list? Because I would like to just go back over.
Yeah, sure. I will actually. I'll try. I haven't done this before, but I'll try to post it on YouTube, and then I'll provide a link right in the meetup meeting or maybe I'll email everyone who was in the meetup or who was planning to attend, and I'll send you all a link to it. And feel free to share it, to others. But yeah, I'm not really going to publish it to a large audience or anything. All right. Okay, thanks a lot, everyone. And feel free to send me a note through Meetup if you have any questions. All right, see you later.